New product announcement at CME Group. Event contracts launch today on September 19th. And to discuss all of these new products, today my guest is Global Head of Equity and FX Products at CME Group, Tim McCourt. Today's podcast is brought to you by CME Group. Whatever the obstacles, CME Group provides the tools that global market participants need to manage risk and capture opportunities. With 24-hour access to futures, options, cash, and OTC products across all major asset classes, you can drive your trading strategy forward with confidence and precision. CME Group, where risk meets opportunity. Tim, welcome back to the show.
Thanks, Anthony. Always good to be here.
Normally I say big day. We've got a new product announcement to talk about. You and I talk about every new product announcement, but I'm going to say that this is huge. I really do think that this is going to be the biggest thing to hit the futures industry in my lifetime. And I've seen all of the electronic trading come. I just think that this touches every single level of trader. We launched today and I was watching this action all day long. And I got to tell you, I love it. It's exciting times, man.
Absolutely. Super excited to have event contracts launched today at CME. As you know, new products are always a challenge to get in the market, but seeing great markets, working with all of our partners and customers out there, having a few thousand contracts trade today on launch date, really amazing to see. And I agree with you. My crystal ball is broken, but I think we're onto something here with these event contracts. So tough to say exactly what will happen in the future, but if day one is any indication, we're really onto something, and the market is embracing these smaller size contracts that make these markets more easily tradable for them. It's really been a lot of fun to launch them, and excited we're here on day one.
Yeah, my crystal ball is out, and everyone knows I'm all in on this. I think that this is going to, like we said, it's going to touch every level of person, of sophistication, to be able to come in and access futures in a way that they weren't in the past. And I think the first thing we have to do to help everybody is really explain to them what are event contracts.
Absolutely. An event contract at CME is a daily expiring contract that is fixed in its payout at $20 per contract. And it's really breaking down some of the global benchmark products we have here into simple yes or no questions. Thinking about, will the S&P 500 close above 3,900 today? Yes or no? It's really that easy to access these markets. Express your views on an up or down, yes or no fashion. But the real thing is smaller size contracts, approachable for everyone with that fixed $20 payout, daily expiration event contracts.
Yeah, and I mentioned how I think this touches everybody. I mean, I just give you just a quick little example of how I think this touches every single level of trader out there. Is getting some work done in my house, and had one of the guys who's doing tile come over and talk to me and say, Anthony, what do you do? Just making chit chat. And I talked to him about the event contracts. This is, just maybe about a week ago. And he's like, I've been looking to get into trading. I just don't have the time. I don't have the level of sophistication. It's a little complex for me, but I'm really interested in trading. And I've read about futures. And he's like, I had no idea this even existed, but I think that this is something that I can do. It could be a great way for me to begin and get access to trade some of these markets that really, in all honesty, maybe not just this particular guy, but some people can't afford, or they just don't have that time or level of sophistication to learn a complex trading strategy.
That's right. I think one of the most attractive things I think about this is it's bringing all the markets that people know and are familiar with and making it much more approachable, making it digestible, where if you wanted to trade equities, but maybe you didn't necessarily want to deploy the capital for a micro E-Mini strategy or an E-Mini strategy, now very simply you can express your view of, do you think the NASDAQ 100 is going up or down today? What about the Russell? What about the Dow, the S&P? It just makes it all much more approachable in these nice $20 bite-sized increments. And if you're new to futures market, it's a great way to learn the market. Or if you're a seasoned market enthusiast, it's a new way to trade it. And the beauty of it is you can trade more than one event contract on the same event if you want to express a slightly larger view in terms of the capital in your account, or just want to dabble with $20 at a clip, you can also do that. You can do it today, not do it tomorrow, do it again on Thursday. Just is really this right size or fits all approach, I think, making futures market way less complex for people to get involved in. I think that's really what is exciting about it, is just bringing new participants to the market and giving them an easy on-road or on-ramp to trade futures at CME.
Yeah. And I think one way that for myself, who's been doing this a long time, got my trading jacket actually behind me, so I've been doing this for quite a while, is there's days where you look at the market and you don't have something coming up on your trading strategy and you're like, you know what, I think this thing's just going to keep grinding higher, it's going to close higher. But as somebody who uses a strategy like myself, there's really no way to participate in that trade. But you, as a trader with your experience and with some of the things you maybe have on your charts or whatever, you now can say, well, yep, yes, I think it's going to close above this price. So now you're just picking the close of the day, and whatever you put in is all you can risk. I know we're going to get into all of that because I think it's extremely important, but I just wanted to show that there are multiple ways for people to be able to trade this. And it's not just for the beginners, it's for the people that have been doing this for a long time, like myself. The next thing is, I'm sure everyone's asking, how are they traded?
Yeah, so in terms of the way they're traded, you look at, it's a question format, right? That's really what we're trying to do is, so will the E-Mini S&P 500 future close above 3,900 today? Will gold close above 1,680 today? And you're really just going to see a price for yes and a price for no. And when you log onto your broker account or the platform, you click yes if you agree, if you think it's going to close above, no if you don't think so. And it's really that simple. And the price is effectively the premium that you pay will then be, in turn, you are looking to get the $20 fixed payout if you're correct. If it closes above $20 per event contract, and if not, you're just out the premium you paid for it, effectively if you were on the losing side of that trade.
You already mentioned a couple of them, but how many contracts are there?
There are 10 event contracts that we launched today. So we have the 4 equity index contracts. That's the E-Mini S&P 500, the E-Mini NASDAQ 100, the E-Mini Dow, E-Mini Russell 2000. Then we also have the 3 metals contracts on gold, silver, copper. In the energy space, we have crude and Henry Hub nat gas. And then we have Euro US dollar for the FX. So 10 contracts in total across some of the most widely, these are already the most widely watched markets that people are familiar with. Now just a way easier way for them to get involved in these markets.
Another thing that I think is important, because these are not traditionally what we're used to seeing from CME Group, right? I mean, we're used to seeing, we talk about the micros coming. Are we talking about, adding an options contract to maybe ETH or something like that? Are these contracts regulated?
Absolutely. These are regulated contracts by the CFTC. They trade on our 4 futures markets here at CME, whether it's CME, CBOT, NYMEX, or COMEX, and they're options on futures at the core of it. So you'll need a futures account at your broker, but absolutely 100% CFTC regulated event contracts here at CME.
The next thing, which you've already touched on a little bit, is just the cost, right? Like, what is the risk? Traders always talk about what is the risk. What are the risk versus reward for these event contracts?
I think that's a great question. It's something that, this is the secret sauce, so to speak, of what makes these so approachable, is at the time you enter into the event contract, you know kind of what your max risk is. So what I mean by that is, right now, if you could pay $15 per event contract, if you think the E-Mini S&P 500 is going to trade above 3,900, you're going to pay $15 in premium, and your max return is effectively $5 because there's a $20 payout. Now, if the market moves and it breaks lower and it closes under 3,900, you're just out the $15 you paid for that. So it's a known risk, a known reward. And I think most importantly, you'll know what you'll lose or win, and that's fixed for today until it expires. You don't have to worry about truing up P&L in both directions. They're not necessarily the same way that futures work. So this $20 fixed payout is access to smaller size contracts, and you know what you're going to make or lose on the trade as a function of when you enter the trade. And I think that's what makes it so easy for folks to get involved.
Like we mentioned, today is launch day, September 19th, and I was watching them throughout the entire day. And I think one of the most intriguing things to me is exactly what you said. If I see this yes or no question, I can decide if I want to take that yes or that no. And whatever the cost of it is in that question is the price I pay. I cannot lose any more than that, which is very different from a futures or options trader that buys something, of course we know the cost of an option. We know the risk when we buy a future. We have our stop in and all those types of things. But once again, things can change and it can cost more. So when we're getting into the trade, there's, it's just something that could end up costing us more than we originally anticipated. With this, that is not the case, which is why I like this so much, especially for newer traders, because they go in and they may not understand futures, versus like buying the E-Mini S&P wherever it is right now. Will it close above 3,900? There's a lot of points down below where they can lose a lot more than what that yes or no question is.
Absolutely. And I think what is nice about it is, regardless of how much that market might rally or sell off into the close, if you finish kind of $1 in the money on the Dow, or the market rallies and you finish $900 in the money, you're still only getting a $20 payout. So I think that's what people really need to understand, is that fixed payout. And when you look, depending on the broker screen you go to, there are a few different price points. The 3,900 question for S&P might be the most active today, but there may also be a 3,750 question if that's a little bit more attractive. If you want a little bit more upside, you might be able to buy that yes for a little bit cheaper, right? So there's also a few different ways to get involved in these event contracts, where typically we'll have about 5 price points around this yes or no question, but it'll be a little bit varied by broker how you find some of those other levels. So it's also, I think, interesting to think about, which price point do I like better? How do I want to play this today? How do I want to express this view today? And if you think, the market might rally a little bit more and you want to maximize that return, you could trade something a little bit lower than the at the money, right? So I think it's really flexible in terms of giving a lot of entry points for participants in the market to express that daily up or down view, or where will the market go from here? I think it really simplifies the way to get involved in these markets.
Yeah, one of the questions I was going to ask you is, how many strikes will there be for each contract?
Right now, we kind of have it set up to offer 5 strikes for kind of 5 price points per question, or per market. They get generated overnight. Once the settlement price is known, they'll effectively be back online at 5 p.m. Central for the next trading day. And we'll keep getting feedback from customers if we need more, or there's interest in other ways to express these event contract views. We're all ears open here at the exchange for great ideas, but starting with about 5 per market per event.
And as I know, and many of you know that listen to this show, especially the conversations I've had with Tim, CME Group listens to feedback from clients and customers, and what it is today doesn't necessarily mean that's what it will always be. So I think that's important, especially when we're doing something new and big like this. I mean, one thing I want to touch on a little bit is, we talked about how futures, there's leverage, right? I mean, that's really one of the things you learn about when you get into the futures industry, is that it's a leverage product, right? Is there any leverage available for these products?
No, these are a limited risk exposure, and you're just going to pay what you see on the screen to buy the yes or buy the no, and then you just have the fixed payout to 20, and it's just that differential. There's no leverage, there's no multiplier, there's no kind of enhancing that return beyond the difference between what you pay for it and the $20 payout per contract. It's really that straightforward, and it's that simple for folks to get involved with, which I think is also great. You just know what that limited exposure is and what the maximum you might lose or win is on that given event, which I think, again, this is a great way, especially for new participants or seasoned market participants that might be new to futures. Great way to learn more about these markets and figure out what trading strategies might work for them.
Yeah, 100%. Yeah. Who's making the market for these contracts?
Yeah, so since these are based on options on futures and some of our most globally recognized product, a lot of it is our traditional market making firms and liquidity providers. They're really tapping into the other parts of the market to be able to offer this unique risk expression or way to trade these events, but it's tapping all the liquidity in the way that these markets are formed. So it's based on the futures contract daily settlement price. So it's not surprising that it's a lot of the same market making firms and liquidity providers that we have, and all the other participants might also trade these. So it's going to be really fun to watch the ecosystem develop, see who gets involved in these event contracts. But it's the same kind of trusted and tested experience they're used to at CME, just in a slightly different flavor, and now in event contract form.
One thing I was going to ask you is, how many total yes or no can you buy in one click?
Well, that's a great question. The maximum order quantity is 250. So we are seeing, pretty good sizes come through in terms of the quote provision by liquidity providers. So people can, pretty easily get that size off if they want. I mean, to be honest, though, I don't think we'll necessarily see a lot of that clip size go through when you think about the contract by design. When we're looking at things like position limits or max order quantity, I would be a bit surprised if people are deploying that type of strategy. But I think the real key takeaway is that we've set it up such that the liquidity provision and the price discovery process at CME will avail itself in the event contract as well. So if people want to trade more than one event contract or trade a slightly larger clip size, can certainly do so. And the markets are designed to be ready to handle that type of order flow should it manifest. But I think early days, we'll see maybe a lot of 1 lots, 5 lots, as people are really trying to figure out how to use these event contracts. But if people want to do more size, we're ready for it.
Got it. That brings me to my next question. Let's just say that somebody did buy the 250, right, at the one click, and that's what they chose to do, right? Do you have to hold that entire trade to settlement? Do you have to hold any trade until settlement?
Yeah, it's a good question. You don't necessarily have to hold any trade till settlement. If just the way to trade kind of out of that position is if you bought the yes and the market moves, is buy the no, right? That's really, it's that simple. You kind of trade the other side of the market, and that's this yes, no, or experience it the same way. I mean, with daily expiring contracts, we'll have to see what type of trading patterns and behavior manifest. I think a lot of people might hold it to expiration because that's the event they're getting involved in for the day, and they might take it to settle. But if you want to monetize your position, or maybe you want to not necessarily lose all the premium that you paid for it up front and see if you can get a little bit of the other side, you just trade the other direction. If you bought the no, buy the yes, and vice versa. It's really that simple.
Yeah, and when you're in a yes or no contract and it's near the close of a day, and let's just say you have one that's well in the money, why would you ever get out of it, right? You're going to take the full advantage of it by waiting to collect the $20, right?
Yeah, I mean, I think that's certainly the logical design element, but you never know. Traders always keeping us on our toes here at the exchange. But if someone wanted to get out, they certainly can. I know it's subject to the market at that time, so it might not be as advantageous if something's that deep in the money. The same way with options is you might find the other side, but you might not like the price you'll get for it. So you'll have to make that decision. Do I ride it out into the settlement? Or do I kind of just take my profit here by trading the other side?
Yeah, and explain the settlement aspect of it. I mean, I think a lot of people understand what settlement is. It's like, okay, well, that's where the market closed. But when you have futures, the bell may ring, but they may keep trading. And you might see the last print and say, well, hey, this closed above or below this level. But that's not how settlement works in futures.
That's right. So that's a really important distinction, that the determination of whether or not the event is kind of in the money or out of the money, or if that yes contract that you traded is going to get that payout, is it's based on the futures contract daily settlement price. So even though our markets trade nearly 24 hours a day here at CME Group, per contract you're looking to trade, make sure you know what that future settlement time is. And I would just encourage everyone to look at the website to get buy those 10 event contracts. And it's the future settlement time, that official daily settlement print, that's going to determine whether or not that event contract pays or doesn't pay, regardless of you might still see the underlying futures contract still trading on the screens.
Yeah, it's so extremely important to know. And also that there's different times of the settlements, like you had mentioned. And when you look at these yes or no's, at least currently what I have seen is it'll tell you when the settlement is. And that's extremely important. So the market might keep trading after that. Like I said, for like a gold example, closes earlier, and crude oil closes earlier than equities. So you have to make sure that you know when that time comes, and that's when that trade is marked.
Absolutely, right. So right now, like while we're recording this, it's 3:43 Eastern, plus or minus. You can still trade the equity event contracts because we haven't had the future settlement time. There's about 15 to 16 minutes left in that contract, but crude is done for the day. The next event will start at 5 p.m. and it's going to be tomorrow settle. So you can also see some of that on the various websites. But yes, I think it's just very important. Not all events end at the same time. So just do your homework and make sure you understand when that is per event contract you're trading.
Last question for today. What are the exchange fees currently on these event contracts?
That's a great question. I think the key takeaway for right now is that we do currently have exchange fees waived as a promotion to really get these contracts up and running. So I would just contact your various brokers to make sure you understand the various commissions and fees that might apply. From our exchange fee perspective, currently waived to help get these contracts off the ground, and we're really trying to make it as easy as possible for people to get involved in these markets.
That's awesome. When I first heard about these contracts, I was so excited about it and curious to see what you guys were going to do with the fees. And I think it's absolutely fantastic that you decided to go that route, waive it for now. And Tim, I got to tell you, like I said, I always like to make some sort of predictions here. I think this is going to be the biggest thing. I really do. And everybody that knows me out there that follows me on social media knows what I'm doing. I'm all in on this idea. I think it's absolutely going to just be huge. And I just want to tell everybody, if you want to learn more about this stuff from the exchange side, you all know I'm going to be putting a bunch of stuff on it. But to learn directly from the source, you just got to go to cmegroup.com. You could follow CME on Twitter at CME Group. But also, Tim, give them where they can learn more from you directly.
Yeah, certainly CMEgroup.com is a great place. I'm also on Twitter. You can hit me up at Tim McCourt CME. As Anthony knows, I'm always great at getting back to questions and trying to get the resources into the hands of all the traders out there. Whatever it takes, just reach out. Reach out to Anthony, go to our website, reach out to me, and really excited about the event contracts. I mean, Anthony, I think you even may have started the next event contract here. It's like, will this be the biggest thing ever at CME? You've clearly bought the yes.
Oh, I'm 250 on the yes every time it refreshes. That's how big I think this is going to be. And Tim, I can't wait to have you back on this show, and maybe it's a few months down the road, whenever it is. And I'm so curious to see how this launch went. And we're on day one, and I watched it all day, and I just got this feeling big. All right, Tim, thank you so much for joining me, my friend. Talk to you soon.
All right. Thanks again for having me, Anthony.
Thank you for listening to Futures Radio Show. If you enjoyed the show, please leave a 5-star review on iTunes. Never miss an episode. Go to anthonycrudele.com and get on our email list for show notifications and for free content that is exclusively for subscribers. Also on anthonycrudele.com, you will find tons of videos and education on trading futures, options, and crypto. Past performance is not indicative of future results. Opinions expressed are solely my own and my guests, and they do not express the views or opinions of my sponsors. Futures Radio Show is produced by Crudele Productions.